Este es pa' que te enteres, este es el detalle. Si caliente está la acera, más caliente está la calle.
Mira, llegó el son cubano.
I want you guys to listen up because the media right now is lying to you. You can't trust them. It's absolute bullshit, the things that they are saying about the stock market right now and why the yield on the 10-year is dropping and why that's causing everything else to drop. Now the 10-year is dropping. Just take a look at the chart for the 10-year and you are going to see that the 10-year is dropping daily, sometimes 4% in one single day. And that is just way too volatile for a treasury bond to drop 4%. That's ridiculous. It's out of this world to think that a 10-year can drop 4% in one day and then the next day drop another 2% and then the day after that drop another 2% and just continue to fall. And that is scaring the markets as it should because they should not be dropping like that. However, the media is going to tell you that it's dropping because of fears that the economy is going to be slow, fears of the Delta variant. That is not what's going on, at least not in my personal opinion. And I am a firm believer that we are going to have a strong economy. I am betting on America. You can bet your bottom dollar that I am betting on America, and I'm going to be betting on American stocks. So I'm not buying that bullshit that they are saying that the economy is going to be slower than expected, and that's why we're seeing such a dramatic, this is very dramatic, such a steep decline in the 10-year treasury yield. What's really happened is the fact that the Federal Reserve has pumped so much capital into the markets. They are buying so many bonds. And the way bonds work is yields drop when you have more buyers. So the fact that the Federal Reserve is buying so many bonds, and take a look at the balance sheet of the Federal Reserve and you will be surprised. They actually increase the amount of bonds they purchased recently. We also have so much liquidity in the market. The capital requirements on financial companies, banks, the fact that they have so much deposits, all of those stimulus checks that you got, all of that money that you're going to get from that child tax credit that they're going to give you monthly, that you're going to deposit into a bank. What does the bank have to do with that money? They gotta buy something that's an asset. And one asset are treasury bonds. So you got banks buying it. Banks are actually telling corporate customers to not deposit their money in the bank because it's just too hard from the capital requirement perspective. They're telling them to put money into money market funds. And what are money market funds primarily? They're 2-year treasury notes. They're buying the shit out of 2-year treasury notes. We have so many people buying treasury notes, buying treasury bonds, that the yields are just decreasing. And another thing, a monkey in this whole wrench, is the fact that hedge funds, big names like Michael Burry, they were short treasury bonds, meaning that they thought yields were going to increase. And now they are being short squeezed. And what happens when they are short squeezed? They have to buy more treasury bonds. So we got 1 million people buying more treasury bonds. And a cherry on the top, another thing that we need to worry about is now Japan. They are going to do a stimulus of $183 billion, I believe. I don't know if it's confirmed yet, but if that passes, who's been a huge buyer of bonds in the history? Japan. They love buying US treasury bonds. So we got another buyer in the market as well. And you throw in all of these buyers and what happens? The yields decrease. But I'm rambling now. I don't think it's going to continue for that much longer. We are going to bottom out, or at least you better pray that we bottom out soon and we reverse and they move higher. Because if 10-year treasury bonds dip below 1.25%, we are in trouble. If they dip below 1%, the market is going to crash. And I'm not talking about a 10% crash. I'm talking 25%, 30%. We're going to see a massive crash if we see 10 years drop below 1%, in my personal opinion. So yeah, you better be fucking scared. You better keep your eye on the market right now, and you need to be looking at the 10-year because it could be a huge indicator of what's going to happen. But you know, I've been telling you guys this. I've been warning you guys of a crash. I've been warning you guys that we are definitely going to see a correction, maybe even a crash. And I am ready to buy the dips. I'm young. I can hold my stocks in the market for a long time. If you're not young, you need to be watching this even more. But yes, I am a fan of buying the dips. You just gotta nibble. Don't think you know the market enough to time the bottom, but think you know the market enough to take advantage of opportunities and nibble on the dips to keep your dry powder available to you so that you can continue to buy if the stocks go lower. You don't need to have all of your money in the market at one time. We are all invested, or else you wouldn't be watching this channel right now. You wouldn't be watching this video, but you can be over invested considering the risk. And right now there are just a lot of risk out there. So in my personal opinion, what I think is going to happen moving forward over the next couple of weeks is we are going to see at least a 5% correction in the S&P 500. And right now, the S&P 500, the NASDAQ, is bullshit what is happening. Stocks are dropping, but they're not being it's not being displayed in the major indices because FANG is moving up, and FANG has so much weight in these indexes that if FANG goes up and everything else falls, it doesn't look that bad when you say, oh, the S&P 500 dropped 0.5%. It's like that picture with the stock market and the economy. The stock market is FANG and the economy are all the other stocks. The front of the house looks beautiful. It looks untouched, but once you get behind that first wall, it is a war zone. That's kind of what is happening right now. But anyways, mi gente, you know the deal. You just got to pay attention, stay in tune with the market, join us on the Discord server where we talk stocks every single day. You get access by the Patreon. There are over 500 investors in there. We're prepared, we're ready to buy the dip, and we're ready to make freaking money. So with that being said, it's been real, it's been fun, it's been real fun, and this is We Are Investing. And what? And we are invincible. See ya!